Hi, and welcome back to my channel. Today we're going to be talking about solar stocks. I guess the inspiration for this is that Tesla has done excellent this week. It just blew up, so I figured I'd go ahead and list the solar stocks that I'm looking at now and what I think is going to succeed in the future. As I always say, please like the video, subscribe to the channel, comment down below, let me know what you like about this video, what you don't like. I'm open to making different content, any new content. So without further ado, we'll go ahead and get started. So with my solar stocks, or really any stocks, I'm looking at a couple of different things. So I have my key features listed. First is market penetration. So what's this company doing? Are they well known? Are their products well received? What kind of market share do they have currently, and what can we expect for the future? The second would be EPS projections. Clearly, as I've talked about before, if a company's not making money, that's not some place that you want to have your money invested. And I think it's really important to look at how they've done in the past as well as what they're projecting for the future. The third one for me is kind of the it factor. Are they unique? So what I mean by this is, what are they doing differently than their competitors? I think in the solar industry in general, and really with any sort of utilities or electric, there's a lot of companies doing the same things. There's not a whole lot of new inventive companies, and so I've listed a couple different kinds of companies and who I think is doing things differently. Now, the last is dividend potential. I've talked about it a lot on this channel. I think dividends are a great way to grow your portfolio without being a day trader or a swing trader or being a genius. That does get a little bit tough with solar stocks because there's not a ton of them out there right now. And I think a lot of that has to do with the fact that it's a newer industry. And a lot of companies aren't profitable right now, but I did find a couple that are paying decent dividends. And the first one that we're going to talk about is Tesla. I just talked about it. Tesla has had an enormous week. Basically, a couple of different ratings agencies boosted their target price, and people freaked out. The combination of their earnings doing well, the announcement of the Cybertruck, ramping up production of the Model 3, everything seems to be going well with Tesla. So I've got a few things listed for them right now. They've got an enormous price, and I think that with the gains they've had this week, they're probably overvalued. I think it's going to take a little bit of time to see what exactly that's about. One of the cons is that they've had extremely inconsistent earnings. So some quarters they've performed very well, other quarters they haven't performed well at all. I think it's important to note as well that with Tesla, you're not just getting solar panels, you're getting their solar tiles, solar walls, electric cars. I think that package does help to really decrease the risk here. It is a risky stock. I think the solar industry in general is pretty risky, but I think the combination of those makes Tesla a little bit less risky. And then I have Elon Musk here because that's kind of what I talked about, the uniqueness. He's their X factor. He does things differently than everyone, and this could be a huge plus or it could be a negative. Certainly when he went on Joe Rogan's podcast about a year ago and smoked with him on the podcast, that killed Tesla's stock in the short run. So you just don't know what you're getting with him. It is worth noting that as established as Tesla is, they have never paid a dividend, and this is really because of those inconsistent earnings, projecting growth in the future, but nothing has substantialized in terms of a dividend. As I said, we're going to look at the stocks individually. So here Tesla's trading at $539, up 2.5% on the day. On the week, we can see up almost 14%. When we start looking at the month, and even further, up 45%. In the last year, 57%. When we look down here in June, bottomed at about $180 and it's up to $540. That's really what I was talking about in terms of potentially being overvalued. When companies start to have prices increase this much in this short of a time period, that can be a red flag. But the big things I want to point out here, as I said, the dividend does not exist right now. The analyst ratings still at a 36% buy rating. People just aren't totally sure what to think of Tesla. And as I mentioned, earnings have been all over the place. So we've seen negative, we've seen up almost $3 per share. They are trending upwards, as we can see, but this next set of earnings at the end of the month will be interesting, especially given how much their price has risen. So that's my first pick, Tesla. Next, we have Terraform Global. This is a company that I think has a little bit of an interesting story and definitely another one to look at. So they're organized under the parent company SunEdison, as I have said. Interestingly enough, SunEdison was actually organized by Monsanto back in 1959. They do a lot of different energy things. Before SunEdison's bankruptcy, they planned to purchase Vivint Solar, which of course is a stock that I'm very high on. We'll talk about it in a little bit. And I do own over 40 shares of Vivint Solar. They are paying a dividend of over 5% right now, which is good to see. The question here is going to be that TerraForm is a relatively new company being publicly traded, and we don't have a huge track record on what they're capable of. So let's look at the stock itself. As we can see, TerraForm Power trading for about $17 right now. That dividend yield 5.16%, up on the day. As we can see, up on the month, huge. Just the other day, they had a gigantic spike. But when we look at the 5-year stretch here, we can see that they didn't go public here until 2017, so not a whole lot to go off of. They do have a relatively decent rating here with a 57% hold rating on Robinhood. Not great, not horrible. Their earnings are trending upwards. Q3 of 2019, we did see a large drop-off, but that will, I think, be an outlier moving forward. This is a company that I think could continue to do well because of that low price. Currently, a lot of room to grow upwards, and the dividend being as high as it is definitely a huge plus sign. Next up, we have Vivint Solar, which of course is one of my favorites. It's the only solar stock that I'm invested in currently. The big things that I like about Vivint Solar right now, low price, trading around $8. One of the cons is that they're still losing money trying to pay off debt. However, they are trending in the positive direction, and I think there's a lot of good things to look at here. They're the second largest solar residential provider in the country. They're extremely well known in the market and have a very good reputation. A big thing for them that they're doing differently is that they are huge into the smart home realm, and I think that could definitely differentiate them from other solar companies in the future. Of course, like many of these other stocks, they're not currently paying a dividend, and they don't have any plans to pay a dividend in the near future. But again, in the energy industry, I think that it is likely that they will eventually pay a dividend. It's going to be a matter of when as opposed to if. As you can see in the middle of filming this, Robinhood did go ahead and switch over from day mode to night mode, which means background went from white to black, but we'll go ahead and get started. As I said, Vivint Solar's price is about $8.29 right now after today. They have had a good couple weeks. On the week, up almost 7%. That's great to see. I've shown it before. In the last 3 months, up 20%. In the last year, up over 100%. And when we look at this 5-year chart, we can see the IPO was right here, just before here in 2014. And they have had a large dip since then, bottoming out here in 2016. But they are on this large upward stretch. There's a lot of reasons for that. And if you go ahead and look at some of the other videos I've talked about, there's a lot of reasons for that. This is my best returning stock so far. I'm up $59 on this, which is always great to see. Average cost is $6.91, 100% buy rating on Robinhood. And as I mentioned, the earnings are negative currently, but they're recovering, and I'm expecting positive earnings anytime soon, which would be tremendous. And next up, we have Sunrun, which is actually the largest residential solar company in the United States right now, which I have listed here. Sunrun's another one with a very low price. They're roughly breaking even right now. They did have an SEC investigation in, I believe, 2017 related to the way that they filed their taxes, which could be a red flag. However, I don't think that's a reason to totally write the company off. Again, they're not paying a dividend right now. As we can see, that's a very common theme with solar stocks. I'm hoping that will change in the future, not super optimistic that it'll happen soon. Sunrun's trading for $15.27 right now, 78% buy rating on Robinhood, which is great to see. Over the last month, very similar to Vivint Solar, up 8%. If we go ahead and look at the last year, they are up 32%. Not terrific, but definitely good growth to see. And over the last 5 years, or really about 4.5 since that IPO, we can see that Sunrun is trending upwards. I don't like this one quite as much as Vivint Solar, but I do think it's a good stock to look at for the future. All right, next up we have SunPower, which is a pretty interesting one, a little bit different than some of the other ones. They have struggled fairly recently. Their earnings are recovering, but this price dip is largely due to underperformance and people, I guess, not having a ton of confidence in them in the future. That being said, the price of the stock did go up 57% in 2019. Granted, the S&P 500 did go up 29% in 2019, so it was a great year, but 57% is definitely great to see. The little caveat here that's interesting, the company was founded based off of technology at Stanford University in the 1980s, and the thing, I guess, the X factor that SunPower is really running on currently is that their core market is based on high efficiency and low cost. One of the big issues with solar right now is that it is very expensive, which limits the market. So if a company like SunPower or really any other is able to decrease the cost significantly, that would increase the pool of potential customers. SunPower, as you can see, is trading for $8.72 right now, 45% hold rating, so not huge expectations for them at the moment. That being said, they did have a good day. If we go ahead and look at the 1 month chart, they're up significantly, and we'll zoom out to the 5 years. As I said, they've struggled mightily. So December of 2018, it was trading for as low as $5. It's up to $8.72 and even peaked here in 2019 at $15. This could be a good value buy. Not totally sure. I would do some more research on this one. I'm not as optimistic on them, but I do think they have the X factor and they're doing something differently. The earnings, as I mentioned previously, are trending upwards, but definitely one of the riskier stocks that I have listed here. Something to consider. Last up, we have NextEra Energy, which is a very interesting case. It's a little bit different than the stocks I've mentioned before. NextEra is actually an electric holding company. So as I say here, they specialize in solar, but they do have holdings including nuclear and wind energy. An interesting note on them is they did petition the government to get an $82 million tax deduction based on their nuclear work and trying to decrease nuclear waste. Didn't happen. The reason that I really like this one is they do have that 2% dividend yield and that 88% buy rating on Robinhood. They're an established business. Coming with that, they do have a very high price, but they're in the industrial sector, I guess, more than the electric energy sector specifically, which I think means that they're a little bit more stable and definitely a good stock to look into. Trading under NEE on the New York Stock Exchange, 247.73 right now. As we can see, that dividend yield at 2.05 definitely differentiates it from the competitors. Up on the week, up in the last 3 months. Even in the year, we can see very consistent growth. If we go ahead and look at the 5-year stretch, this is where it's impressive. 132% growth in the past 5 years, plus that dividend, with plenty of room to grow. I believe when I checked, their dividend payout ratio was between 20 and 30%. Could be wrong on that one. But if that is the case, that would be excellent to see from NextEra Energy. That concludes the 6 stocks that I'm looking at. Thank you, and I'll be back with some more content this next week. As I said, go ahead and like the video, share, subscribe, comment down below, let me know what you think, and I'll be back with more. Thank you.